Hello, everyone, and welcome to the Monday Open, hosted by the Vantage private client team. My name is Ollie, and joining me today, Steve. How you going, Steve?
Hey Ollie, good. How you doing?
Yeah, doing very well, thanks, mate. Okay, so let's move into the agenda for the video ahead. So, for any of our returning viewers, this will look pretty familiar, but for any of our new viewers, this is how we normally run it. So, starting off, we'll take a look at the key events from last week and have a look at our major themes and see how this moved prices. We'll then move into the week ahead section where we'll put a spotlight on a couple of the big events for the week coming up, give our take on how this fits in with our key themes, and give our little speculation on where we think prices will go. We'll then move into the technical corner where we'll be putting a spotlight on a couple different markets using our top-down analysis, using our technical indicators, and giving our take on where we think the prices will go. And lastly, we'll move into our Q&A section where Steve and I will be answering some of your guys' most commonly asked questions from last week. Okay, so starting off with the last week section, on your screen, you'll see your guys' top traded products from last week. I think quite interesting. We've seen the re-emergence of the Aussie dollar back into the top 10. Probably not too surprising given what we have coming up for the week ahead. But how about you, Steve? Any big surprises in there?
Definitely no surprise that the Aussies back in there, especially with last week as well as the anticipation of tomorrow, the race that stops the nation, but also the same day as the RBA decision. So we'll be delving into that very shortly.
Lots to look forward to. So let's take a look at the key events from last week and see what drove those prices. So starting off last week, we did have a public holiday out of New Zealand. Steve and I, we've spoken about the impact of public holidays on financial markets a fair few times now. But if anyone is new to that one, please feel free to reach out to us or have a look at any of our shorts on YouTube. So then the key theme for last week, I think, was the central bank decisions, having four of the major central banks given their calls on interest rate decisions. So starting off, we had the Bank of Japan, who opted to hold their rates at 0.5%, which was largely to the expectation of markets. So in his press conference following, the BOJ governor cited slower economic growth as a result of the tariffs, as well as the influence of the new Japanese prime minister, whose policies do generally favour low interest rates. As a result, over the course of the week, we did see yen weakness as the undercurrent theme, which was down 0.75% versus the dollar on the week. As well, we did see the Nikkei hit all-time highs. It was actually up 5.31% from last week's close until the close last Friday. Where I do think is quite interesting, though, in terms of the discussion around the Bank of Japan, is in the day following the announcement, we saw the Tokyo CPI print at 2.8%, which was above the 2.6% expected and significantly higher than the 2% target, which Bank of Japan Governor Ueda has kept referencing back. As a result, we've seen that fuel bets for a rate hike as early as next year, which is also supported by the Bank of America, who is currently forecasting a January rate hike. Next on the central banks, we had the ECB, who did hold rates as expected. We did see a couple comments from some of the ECB members who are kind of saying now that the risks to growth and inflation are now balanced, and are given very little indication of their plans in the short term. Personally, I think based on what they're saying, I think it's could go either way. I think it'll be very data dependent to determine where the rates are going to go. And as a result, over the course of the week, we did have some euro weakness, with the euro actually closing down versus all major currencies except for the pound and the Swiss. Next on, we had the Bank of Canada starting off our
Yeah,
North American markets.
Yeah, the Bank of Canada, we actually saw a cut of 25 basis points, which was in line with expectations. It did show some cracks from the US tariffs, but inflation largely under control. According to Reuters, the actual poll, there's about over 60% economists expect a long pause. So we're looking at, could be towards mid 2026 when it comes to the sort of next whether it's a cut or raise. But the key throughout the week and a lot of the themes that did cause the volatility, as well as the speech, was around the US cutting 25 basis points. So largely expected. but there was no real surprises from the actual cut perspective. But the biggest sort of surprise was probably a 10-2 vote. So the Fed members, we already knew that Stephen Moran, being Trump sort of appointee, he's been pushing for a 50 basis cut, and there was no real surprise about that vote. But the next one being Jeffrey Smith, so the Kentucky Fed, actually suggested on hold. So this was pretty critical, considering that it was probably expected to be more of a 11-1 vote. With Moran, we already know what his vote is, so it's probably non-relevant. But the Fed really announced that it's also looking to end its quantitative tightening, which is basically reducing its securities holdings on December 1, meaning that it's actually going to stop shrinking its sort of balance sheet. We also saw the labor market weakening, and inflation remains elevated, so above that sort of 2% longer run goal. There was also emphasized uncertainty about the outlook and risks on both sides, which is again what Fed Powell has actually mentioned when it comes to the inflation risk versus the employment risk. So he's previously mentioned the inflation to the upside as well as the employment to the downside. Also, Chair Jerome Powell made it clear that while the cut is in place, there is no set path for further cuts, which was really inferring to the future meeting being December. So he basically said that was not a foregone conclusion. So what we saw from that was that before the actual speech, we we're looking at about a 91% probability of a December interest rate cut of 25 basis points. Now that's actually changed to 69.3% of a 25 basis points, according to the Fed CME tool. So really interesting to see with that. A lot of the surprise in markets really was focusing on two cuts for the end of this year from the Fed. But now with that sort of possibility, and also with the Fed kind of flying blind with the US shutdown, it really begs the question whether that sort of probability is going to probably change. Locally, we did see probably one of the sort of shocks that we didn't actually expect was really around the Aussie inflation. The year to year was a surprise higher than expected. So looking at sort of 3.2 versus 3%. But the RBA looks at really the trim mean, which rules out sort of volatile sort of factors like, for example, electricity. That came in at 3% versus 2.7%, which is actually the top of the 2.2 to 3 target band that they're looking at. So this was an increase in more housing, recreation and culture, as well as transport. We'll delve into a little bit later when it comes to questions, but there was actually a before um, there's actually 93% of percentage when it comes to a hold for tomorrow when it comes to the RBA decision. I know that the actual speech that Michelle Bullock mentioned on Monday, it actually changed the probability throughout the week when it comes to the ASX forecaster. And now we're looking at a doubt over a December cut. And we could be looking at potentially mid 2026. So after that sort of inflation figure, we did see it instantly with the Aussie test that sort of resistance around that 66.2 resistance levels, but was really dampened by the US Fed comments from Jerome Powell. So it really changed that. We saw a lot of the US unemployment data um, that didn't actually come out last week because of obviously the US shutdown. We saw the President Trump as well as the Chinese president meet, but that was almost non-event. They basically, I guess, kicked the can down the road when it comes to yeah, just extending that.
What
There's
was
a
the 12 out of 10 meeting, though, wasn't it?
It was a 12 out of 10 meeting according to Trump, but according to all reports, yeah, there's from what I've read is that the Chinese have a bit of a stronghold on Trump. So yeah, or smokes and mirrors, I guess you could say. But a key notable event was around the US sort of SNAP. So SNAP being the Supplemental Nutrition Assistance Program. So yes, Americans love their sort of acronyms, but basically it's a food stamp. So that affects benefits of more than about 42 million Americans rely on those sort of food stamps. So we're going to look at into that a little bit. Like we'll basically that's going to really impact as of the 1st of November. So there is a meeting on Monday, so it'll be basically tomorrow our time, just to see with what happens when it comes to the US shutdown as well as the snaps. But the one big thing I wanted to note is that Nvidia. So Nvidia is actually the first $5 trillion company. So to give you perspective, it's actually bigger than Germany's GDP, which is at 4.6 trillion, as well as Japanese GDP at 4.4 trillion. So just thinking about that, would you prefer to actually visit Nvidia's factory making chips, or would you rather cherry blossoms in Japan, Ollie?
Oh mate, take me over to Japan. Seeing the yen at the moment, it's tanking against like a lot of currencies. You can see on the all-time highs as well. We had the dollar against the yen hit a 10-month high. As well, we see at all-time highs for the euro yen and the Swiss yen, which I did find quite interesting. So, yeah, take me over to Japan, mate. The Aussie dollar might carry a bit more weight over there at the moment. We also saw the euro against the pound hit its highest price since May 23. I think probably equal parts euro strength as well as pound weakness on there over the course of the last year, particularly. As well, all-time highs. Easing cycle for a lot of central banks is keeping the index markets hitting all-time highs. I mentioned the Nikkei already, but had all three of the major US indices hitting all-time high, as well as the FTSE and Spain. Randomly enough, I thought give a shout out to the Spanish index. Okay, so let's move into the week ahead. So starting off, anybody who's watched the video in recent weeks are probably going to get sick of seeing Japan up in the public holidays. Seriously, get us over there. We need some more. And then we've got central banks taking over this week as well.
Yeah, so obviously with the Japan public holidays, it's their fifth that we've probably mentioned, and they've got one more. There's also a notable event that actually is occurring today. It's Jack Kelly, so our head of sales, his birthday today. So shout out to Jack. I'm sure you're watching in, and yeah, I'm sure you're loving this sort of shout out. So happy birthday. I'm not going to say how old you are, but let's say it's your 30th, so happy 30th. But definitely the central banks. So tomorrow, obviously, we've got the Melbourne Cup Day. It is a public holiday in Victoria. So, yeah, they've got the Melbourne Cup Day, but we're also looking at the RBA decision at 2:30. So 2:30 p.m. and then the race, I believe, is like 3 p.m. So we're pretty much going to be looking at the probability of a rate hold, like what you're going to discuss a little bit further in the questions, Ollie. But yeah, with all the sort of the CPI data that came out last week, the chances are fairly slim, according to the tracker. We're looking at the Bank of England. The Bank of England's actually expected to be at hold. So it's actually very interesting with the Bank of England, because Barclays and also Goldman Sachs is predicting a 25 basis point cut, while Deutsche Bank as well as BNP Paribas is predicting a close dovish hold. So even though it's expected to be held, there's a lot of caution behind that. So it'll be interesting to see how that impacts the pound, especially since it's not really sort of guaranteed. We're looking at the sort of China data, so we'll see the sort of China CPI and PPI. We also had the sort of Caxton data that came through a little bit earlier today, which was showing it is a little bit a bit of a contraction when it comes to the sort of businesses. So just seeing that we've got the New Zealand employment change. So it'll be interesting to see how New Zealand's going when it comes to their unemployment. From all reports, we are going to be looking at getting the US ISMs, the ISMs as well as the ADP non-farm employment changes. Obviously, we're very unsure when it comes to the US shutdown, how that's going to impact a lot of the other sort of data, which isn't like the unemployment, for example, as well as average earnings. But also notable event is that we are currently on the cusp of actually breaking the US shutdown record. So as of Monday, it is actually going to be basically the same as 2018 to 2019. But we're going to elaborate on that with the questions as well.
All right, well, before we get to the questions, let's jump in with the technical section. So I'll share my screen with everybody. So to give a bit of context on reason why I wanted to pick Ethereum is because I think we are seeing a fair few headlines around the crypto markets at the moment, particularly in terms of Bitcoin with hedge against inflation. So I thought let's take a look at another market which has been grabbing a lot of attention recently. So starting off on your screen, you guys will see the Ethereum against the US dollar on the monthly chart. So for the past 3 months, we have been, 2 and a tad, we have been on a pretty strong downtrend after rejecting a new all-time high just shy of the 5,000 price point. It's been on a pretty steady decline since we got pretty tall wicks on either side of the open and close for the last 2 months. Where I do think this is quite significant though is, and I feel like from July through to August, we did look pretty overextended past our moving averages, and that was quickly met with a pretty steep decline to trade back on towards its moving averages. We saw that in early 2024. We saw it trade back towards moving averages most recently in November 24, and it traded back below its moving averages. So I'm trying to look for a signal to see if selling momentum is in play for the trading week ahead, to see if we actually do make a move lower towards its moving averages. If we move this into the weekly chart, get a bit of a better understanding of where we are sitting, we can see that. So we can see using our Fibonacci as well, dating back since the start of April up until about now, can see we did reject the all-time high. We traded back towards its first retracement at the 23.6%, and now where we're sitting is just above the 38.2. So we can see on here, we're on a pretty steep downtrend, as I've already mentioned. But if we look into the daily, we can get a bit of a better understanding of the key price points that I want to look at for the week ahead. I want to get confirmation that the selling momentum is in play. However, over August, we did see prices test support around the 37.25 on 4 different occasions, and was rejected each time. Each time we did see it reject on that support, it did trade up towards its moving averages again. We're seeing that consistently as well with a sequence of lower highs. But where we're sitting now, it looks like we actually did hit on that support price earlier today. So it's yet to be seen if we are going to make it up towards the moving averages. But I think for a confirmation that the selling momentum is in play, I'd either like to see the price move up towards its moving averages, continue on that trend of making a lower high, and then go to re-challenge the support price. If we do see a break and a hold below, I'll be looking for opportunities to sell as we head towards swing lows, towards the 34.20 sort of price point. However, I don't want to play the other side of that, given that this is a very tried, tested, respected support as well. I also will be thinking that if we do move up towards its next key retracement price point, and make a higher high on its high from the 27th of October, then we could be looking at a change of momentum to go challenge again towards its all-time highs. Okay, so next on I wanted to look at is on gold. So I'll start off on the weekly chart for gold. As we can see, last week we did close out our second consecutive down week for gold. Interestingly, though, the last time we did see that was around the start of or mid-June when we're towards the start of our range bound sort of period there. So I'm looking to see if the downtrend is still in play, if we're going to be looking to find support, make a new high, or if we are going to be ranging for a little time, as history would probably tell us. Where we're sitting, we're seeing our MACD lines above our signal, which would tell me that there is still some bullish momentum in play, although they are converging together. So want to keep an eye on that one. Moving into the daily chart as well, we can see we do have a pretty clear sequence moving down. And as well, we've got our MACD, which is angling down. We're starting to diverge a little bit on the MACD and the RSI, which historically will be indicators of bearish momentum. So for where the prices are sitting now, I think if we do move lower to make a new lower low on last week, I do think the selling momentum will be in place. If we see a clear break and a hold below last week's low, we'll be looking for a sell towards potentially its next retracement levels. If we do see it find support at this 38.2 retracement level, and then we go on to make a high above the Monday high last week, we could see it then make a challenge higher towards a new all-time high. As well, if we do see prices move up but fail to break resistance at that 23.6 resistance, we could see it actually range between this area for a little bit. As I said, it is on a little bit of a knife edge at the moment, so I'm waiting for signals to confirm momentum in any direction. So because of that as well, I want to make sure that you have an effective risk management strategy if you are looking for an entry into gold. Okay, so that brings us to the end of the technical section. So moving into the Q&A section. Steve, would you like to take it away with question one?
Yes, so question one is, what is the longest US government shutdown? So the longest government shutdown was back in 2018 to 2019. So started on the 22nd of December 2018 to the 25th of January 2019. Like we mentioned before, is that we are approaching the same date, so that we're approaching 34 days. So we do have a last Thursday, basically the Senate adjourned until Monday, while Trump has actually said that the shutdown's not going to end until the Democrats give in. But there was no actual immediate plan to address the main concern. So the main concern is really around the healthcare costs, which is a sticking point for the Democrats who want the Republicans to agree to extend the government subsidies for more than 20 million Americans when it comes to the Obamacare. The sort of impacts that we're seeing is that a lot of the sort of furloughed federal workers, so the ones who aren't actually working at the moment, they're going unpaid as the shutdown continues, while active duty military personnel, as well as the National Guard, who are basically deployed, must carry out their sort of duties without being paid. So it's actually delayed until the shutdown is over. So imagine doing your own work and then not knowing when you're actually going to get paid. So that's the sort of impacts we're seeing with the US shutdown. So hard to imagine, really.
Okay, and I'll take it for question two. So question is, why did the Aussie CPI move the market so much last week? And the easiest answer for that is because it significantly changed the likelihood or expectations around the RBA decision this week, which in turn led to some volatility in AUD pairings as well as the index markets. To give an example, you would have seen a couple of weeks ago in one of our videos talking about the Aussie unemployment data and how the print increased the likelihood of an RBA rate cut from 44% to 71%, to which markets started to price in a weaker Aussie dollar while pushing the Aussie 200 up to a new all-time high. Where the CPI came in significant is that it brought the likelihood of an RBA rate cut down to just 7%. And as a result, we saw a strong sell-off on the Aussie 200, which actually did have its worst performing day since early April, as well as the Aussie dollar weakening to close out the week. So CPI is one of the main data points that a central bank will use to shape its decision. So any print which influences the likelihood of a move which is expected will increase the volatility in a market. So when trading around anything central to inflation or unemployment, is always worth managing your own risk management strategy through there. Okay, so that brings us to the end of the video today. A recording of this will be uploaded on YouTube once we have finished. As well, we will be posting in a link to the recording in our VIP chat room as well as on Telegram. For anyone who's looking to get involved with the Monday Open, ask any questions, anything like that, please feel free to reach out to Steve or I directly, or feel free to reach out to us on any of the socials or the VIP chat room. So I think that's all from me. Thank you everyone for watching, and Steve, I'll see you later.
Thank you. Good evening, everyone. And also, happy birthday, Jack, again.
Happy birthday, Jack.